Hello and welcome to a brand new episode of ET Markets PMS Talk, a show where we discuss the opportunities as well as investment strategies deployed by the fund manager in the popular space of ultra HNI investing. Well, my name is Shadhajan, and today we have with us a very special guest, Rajnish Girdhar, who is the CEO at Karma Capital, who manages over 4,500 crores in Indian equities for large sovereign funds and domestic investors, with primary focus on ultra HNI investing as well as family offices and institutions. Now, welcome to the show, Rajnish.
Thank you so much, Kshitij, for having me over and for the kind introduction to Karma.
Thank you so much, Rajnish, for being part of the show. No, your fund that aims to capture India's growth story, in fact, delivered double-digit returns, on a 2 as well as on a 3-year basis. Fast forward to 2023, many are calling India's decade and some are calling India's century. What is your view on India's story considering the global slowdown?
India is not immune to the global shocks, right? At the end of the day, we are also a participant in the global economy. So as the world slows down, we will also probably see some slowdown over the next short term, maybe 2-3 quarters. But India is in a great space from a longer term perspective. So if you look at balance sheets of Indian individuals, corporate, government, they're all in pristine shape. The infrastructure push has been strong, and the government continues to improve the manufacturing capability now that we have global opportunity around that. Also, if you step back, India has always been a domestic consumption driven story. So that kind of immunes us to the global shock. But the global macros, inflation will kind of probably drive a bit of a slowdown. But over the longer term perspective, we believe India will outperform most developed markets. Our fundamental domestic driven growth story, infrastructure push, and the government's economic reforms. So we are very bullish on India on the long term. I think we are in a great space from that perspective.
Right. Bullish on India for the long term. That's the message coming from Rajnish. Now, let me quickly hop on to the next one. So, so how do you pick stocks for the fund? Tell us a little bit more about the GARP strategy.
So, Kshitij, we are fundamentally bottom-up stock pickers. And if you want to, as people put a style bias, we are growth at reasonable price investors. So, we believe this is best demonstrated when you're able to pick a stock early in its growth cycle, before probably the broader market has discovered or chanced upon that. We do this by tracking companies for a very, very long time and building our own understanding of the company and its conviction and our own conviction on the company. See, for us, the rate of change is more important than an absolute return like an ROE or an ROE. Okay. And for us, we monitor the key triggers which will drive this rate of change, which will drive growth in revenues, which finally leads to profit generation, free cash flows, and that is where we believe the stock makes its best money. More importantly, you have to understand we do all of this in-house. Okay. So we don't believe in, I won't say believe, but we don't want to base our numbers on third parties. So everything is done house, so it brings strong conviction. That is why we probably have differentiated portfolios and we are able to deliver returns over a longer period of time as well.
Absolutely. In fact, these are one of the key things which helps in picking the right kind of stocks for long-term growth aspect. Now, another important point which probably everybody or in fact investors would want to know is how do you manage risk in the portfolio, and the cash levels which you sort of maintain, and have the cash levels increased in the recent times, or you could say probably in the last 1 or 2 months or 3 months, considering the recent rally that we have seen. Although we have not topped above, or although we are not trading above 18,000 and 4 to 5% away from the record height, but at a certain point in time we were definitely down around 10%.
Good question. I think one of the key things that you learn managing money over multiple cycles, and we've been doing this for 17 years now as a firm and maybe as an investment team for much longer, is how to manage risk in your portfolio. So we are very conscious of when we enter the stock. We normally don't own more than 1 to 2% of our portfolios in any stock. And as our we built a conviction around the stock, right? This is how the stock should grow. As the conviction, as the story, as the theme plays out, we continuously keep building positions in that stock. We are also very conscious about liquidity. So as I said, the first thing, the entry price is very important to us. We do it slowly over a period of time. Then liquidity in a stock is another critical factor. We normally don't own more than 10% of any stock in our portfolio.
Okay.
We will not hold more than 5% of the outstanding shares of any company. And that, for us, makes sure that, at times of trouble, we have enough liquidity cushion to go about it. I think on your position for us, cash is an outcome. So we really don't get cash as a strategy. Cash is an outcome of what we do. Sometimes we might have more cash in the portfolio because we might have exited some positions. But beyond that, normally we don't hold more than 5% cash in our portfolio. We get money from the client for putting into equity. So we believe that that's not a call to take.
Absolutely. Now, in fact, I was going through the fact sheet as well. Wanted to, get some understanding from you. So what makes you so bullish on healthcare, communication, as well as in the media sector?
Good point. So let's start with the easiest of the lot, maybe telecom.
Okay. Sure.
Okay, sorry. Nothing is easy investing. I take my words back.
Yes. Agreed.
So on the telecom side, so if you look at the current market, the 90% of the revenues are now controlled by the top three players.
Right.
And in such a strong consolidating market, the pricing power is immense. So, and with the newer technologies like 5G, etc., being rolled out, we believe entry barriers for new players to come in are very high. And this will continuously mean an increase in ARPUs and pricing. So we are very, very bullish on that. Media and entertainment is going through the same thing. Strong consolidation, as the top three players will now probably control 75-76% of the market. The other thing playing out in the favor is that as India moved from a $2,200 per capita country to maybe a $5,000 per capita country, the spends on media and entertainment will continue to increase. As people get wealthier, that is where the money starts to go.
Right.
Maybe even in the telecom space indirectly, but media and entertainment will be a huge beneficiary there. Healthcare, I think, is a very very different long-term growth story for us. We're very bullish on the domestic healthcare space, where we see a significant long-term play coming through from a fundamental growth happening in the industry per se. Okay. One of the things that has happened in the pharma space in the last 6-7 years was a lot of misallocation of capital, which did not play out as the companies expected, and they've learned from there. So the capital allocation has significantly gotten better. If you look at these companies, which are now significantly net cash companies, which used to be probably a large net debt companies, are fairly large cash companies. For us, FMC, pharma is probably in the same space FMCG was 10 years back. So, you're looking at significant long-term growth runway, larger players still having a lot of headroom to grow. And, again, they will also be the beneficiary of, as the country gets richer, healthcare spends are going to go better and better.
Absolutely. And have you made any recent changes to the portfolio? The portfolio churn. Is there any churn that happened recently?
See, again, we are very, as I said, we are long-term investors. Our average holding periods are very high. We typically hold a stock for maybe 5.5 years. So we normally don't change, or we don't add or delete too many names in a year. Our average churn is less than 30%. I think last year was maybe 0.13% or something. Okay. But having said that, yes, we've added names in aviation, we've added names in pharma, we've added names in the infrastructure space. So we will continue to add wherever we see opportunities. But not more than 2 to 3 names a year.
Right. Now that we have you in the interview, we can't let you go without getting the market outlook. So What is your view on the overall markets as we enter the fifth month of the year 23? We are already inching towards, or you could say we are already above 18,000 levels, despite, we've seen 3 US bank failures, rising Fed rates, and is the rally sustainable?
Very good question. So let's go back to what the RBI thinks about us. RBI thinks we're very well positioned in a much better state than the rest of the world, right? Both from a macro perspective as well. There is a headwind from a global macro perspective, but I think fundamentally we are in a strong space. We are from both our consumption, both our macro situation, and the government's continuous push towards investment on infrastructure and reform. So I think two things, as I said, we've always been a consumption driven economy, right? When you're a domestic consumption driven economy, you are kind of able to grow continuously, and as India gets richer, that will continue to happen. The government's push towards infrastructure will help sustain. And I think in the short term, even the monsoon looks pretty okay. The chances of El Nino look not too bad. So I think the rural growth should not get hurt too much. So I think from a market's perspective, we continue to be fairly bullish. As I said, over the longer term, maybe as I said, over the next 2-3 quarters, the market would take a breather. But it's already, you mentioned yourself, 18,000 peak number, so which was actually also a breather in a way that we achieved the first time. This was done in maybe December 21. So we already had a 15-16 month of time correction. So we continue to be fairly. I think there has been a time correction. So we continue to. Our outlook remains maybe apart from the next 2-3 quarters, we'll still continue to remain a very powerful growth driver for the world.
Right. So one thing is very clear that you are India bullish, and another thing which comes with that is when the global when the Indian economy is growing, the other theme or the other sector which usually grows is the small and the mid cap space, and yours is a multi-cap fund. And how do you see small and mid cap stocks performing in the year 2023? And even though if you look at last financial year, we saw a little bit of not the outperformance, but in fact we saw the opposite. They were underperforming the broader you could say the Sensex and the Nifty. So how should investors play this theme in this year?
See, India is a very, very diverse economy, and it provides opportunities across various sectors and growth opportunities, which cannot just be captured in the top 50 to 100 stocks. Okay?
Yes.
You have to go beyond that. And these small and mid-cap names, will continue to provide that opportunity. The next growth engines which will become giants or which will become large as we go forward. So there is always going to be that opportunity. We are always very, very conscious about that fact. As I mentioned, we are bottom-up stock pickers, and we look at opportunities across the spectrum. So for us, it's an outcome again of trying to look for ideas, and wherever we see an interesting idea, we will go and invest. So for us, stock picking is the key thing that we do. And I think small and mid-cap growth will be a part of the India growth story. You cannot not have that happening. But we are benchmark agnostic. We try and produce differentiated portfolios which capture these opportunities across capital bias, whether it is large, mid, or small cap. So I think the opportunities will continue to remain strong across small and mid cap.
Right. And a little bit, let's talk a little bit about the fund. It's yours, a multi-cap fund, and who should invest in these funds? Is it for the investors who are high risk takers? And as you rightly pointed out before as well, that the time horizon, that you're a long-term investor, so is the 5 to 7 year period kind of a time horizon justifies to remain invested in the fund?
As I said, we bring a slightly differentiated worldview to the market. We are a differentiated portfolio, and sometimes contrarian to the market because of the way we think, which can at times lead to a bit of a volatility in the fund. So versus the benchmark, but that's how returns are generated. You return higher returns will probably induce a little bit more volatility than normal. So we always always tell people that we are looking for clients who have a 5-year time horizon. Ultra HNIs, family offices, HNIs, whoever is looking for a differentiated approach to money making and has a 5-year time horizon and who is willing to, probably handle a bit of the volatility which comes with the market and delivering returns like this, we'll be very happy to partner with them.
Well said. And because at the end of the day, the energy level, or at least the understanding, has to match. From both the parties, from your side as well as if the investor who is coming in, he or she should have that at the back of the mind, should have this in the process that it will take 5 to 7 years, or at least minimum 5-year period of investment to remain long in the fund.
Absolutely.
Right. Well, on that note, thank you so much for your time, Rajnish. And that's all for now. But do stay logged on to etmarkets.com for more on news, business, and economy. And thank you so much for your time, sir.
Thank you, Jatish. Appreciate it.